Monday, November 2nd, 2019, MONERO 64, home of alternative economics and contrarian views. Some of you have asked me, why focus on gold? The Dow has done so much better. You're wasting your time looking at gold and silver, right? But there is a reason. The reason is because gold and silver are money. The Dow and stocks are speculation. They're investment. Back 100 or more years ago, back in the 19th century, stocks were an instrument for the very wealthy that could afford to have plenty of savings, to risk the savings. Unfortunately, and I say that meaning that actually, unfortunately, the push for the average person to invest in the stock market, to be in equities, in my opinion, has been kind of a psyop by the powers that be to suck the money out of the public. Yes, they tell you that you can own a part of corporate America or corporate UK, right? But I think it's just a scam in my opinion. I think what people should do if they want to invest is invest in something they know, invest in themselves, invest in their own businesses, right? Of course, they make it very hard for people to have their small business. That's another scam as well, right? They punish very small companies. They punish the mom and pop business, right? With taxes. They allow the big corporations to not have to have the same rules and regulations. They allow the big corporations to have offshore offices and to funnel their profits and keep them offshore without paying tax, right? They give them all these advantages. And gold and silver, what's it got to do with that? Well, because back over 100 years ago, back before World War One, really when gold started being taken out of the system, and it happened in Europe because of World War One, they couldn't finance the war. That was an excuse to take Europe and the major powers in Europe out of gold. U.S., of course, kept going a little longer until 1933. You see, without gold and silver, for the average person to protect their savings, they'd have to try something riskier, the stock market. And that's what they've done. And that's why I keep going on about it. I'm not advising people whether they should be in stocks or not, even though I personally think it's way overvalued right now. What I'm trying to say is that you need to look at gold and silver as sound money, in my opinion. I've done it for the last almost 20 years, since 2002. You need to do your homework. You need to start. You have to start. Buy a little coin, a gold coin, buy a silver bar or a silver coin, and look into it. Learn about it yourself. Yeah, I will do videos to help out, of course, to give you an idea. Here I'm going to show you, I'm going to give you an example, and I'm going to go back to 1864. I'm actually going to use the Bank of England website. They have an inflation calculator, which actually helps. Sometimes you can, use the enemy to help yourself. So I'm going to go back to 1864, which is 100 years before I was born in 1964. And I'm going to look at if I saved £1,000 in 1864, how much purchasing power it would have in 1910. Why didn't I use 1919? Well, because by 1919, they had already started inflating the system. Britain went off the gold standard for World War One, right? So here we go. £1,000 in 1864. What did it cost in 1910? Well, 1,078.65. So inflation average 0.2% back then. The base rate, the Bank of England base rate at the time, which is the rate that nowadays is less than 1%, I think is 0.75%. average around 5% back then. So yes, there was a little inflation, 0.2% a year, but you could invest your savings, let's say, in gilts, which are the government bonds. And they were fairly safe, and they averaged around, I think, 2.5 to 3%. So you could actually put your money aside and save it, put it in the government security, which was safe, or you could put it in something a bit riskier, another bond. But so you had more than 2% over 40 years return on that £1,000. Inflation was almost minimal, so you could save, right? You didn't need to be in the stock market and risk your savings, right? Like people do today. Yes, of course, we've gone up a lot in the last 11 years in the US. But who's to say it's not going to crash again and put you off and make you lose all that money, right? So let's go and look now since I was born, 1964. If, I don't know, my parents had put £1,000 aside for me, how much would I buy? How much would I need to have the same purchasing power of £1,000 in 2010? Well, there you go, 15,804. That's not what that £1,000 has turned into. That basically is saying that that £1,000, basically you would need 15,800 in 2010 to have the same purchasing power that £1,000 had in 1964. You can see the inflation average 6.2% a year. So there's the proof. Precious metals, gold and silver, a sound money system promotes stability in the money. It gives the general public the safety, but nowadays, with inflation running a lot higher, they tell us it's around 2.5 to 4% here in the UK. I would say it's much more like 5 or 6, even more. You get nothing on your savings, right? There are investments out there being advertised for the individual investor, like corporate bonds, or and you see that on the internet, and they promise 5-7%, but those are very risky. Those are investments that you could lose your shirt, right? Even with regulated investments like the FCA, the Woodford Fund, people are gonna get hurt. And that's why I go on about gold and silver. I'm not saying that the stock market hasn't done well in the US, because what I'm trying to say is that for the average person that doesn't have all the wealth and the wherewithal to have someone manage their fortune, so to speak, I think gold and silver is a very safe way to save. Don't get distracted by the fact that gold and silver don't earn an income, right? Money in the bank is not earning an income, even if they're paying you a small interest. Even gilts nowadays, they pay you 1 or 1.5%. Yes, you get a nominal income, but in terms of purchasing power, you're losing money because the inflation is a lot higher than the yields. The world's been turned upside down, and that's why people need to protect themselves with gold and silver. What do I recommend in terms of coins in the UK? The best one, in my opinion, is the sovereign, a full sovereign. There are half sovereigns as well. And why is that? Because they're legal tender in the UK. So if you exchange your fiat paper, your blank Bank of England note for sovereigns, you're not liable to capital gains tax. What about silver? Well, there is VAT on silver when you buy silver here in the UK. I've paid VAT on silver. I think in the long term it won't matter, the 20%. It will be insignificant. Some people say there are ways to buy it from Germany, as Germany is in the EU, and get the silver from Germany shipped to you. and you don't pay the VAT. You can look into that. I haven't done that before. Silver as well. You just look at the different coins. I have a promo code with Gold Investments here in the UK, goldinvestments.co.uk. They're a bullion dealer in the city of London. Arguably one of the oldest bullion dealers, family run. The promo code is MONERO64. You get 0.5% discount. They'll ship it to you as well, insured. But have a look at other bullion dealers if you get a better deal. I'm not saying you should just go to Gold Investments, right? So there you go. That's the reason why I go on about gold and silver. Yeah, and gold and silver, of course, in my opinion, are undervalued against paper assets, the stock market included. So with that, let's look at where the markets are this morning. I'll give you a rundown. I'm in London, of course. It's 8:10 a.m. So let's see what we're doing. We've got gold and silver are being sold off this morning. They rallied quite well Friday afternoon. We're down a bit here. Gold is down $7.50, 0.5% at 1456.40. Range has been 1464 to 1455.84. Silver is down 17 cents, 1% at 1684. Range has been 1683 to 1703. So precious metals down. There's more talk about the trade deal, right? It's not even the trade deal anymore. It's just phase one. Phase one is supposed to have been completed and signed by the end of November, and we're still at it. There's talk that things are improving for phase one. They might sign it in the beginning of 2020. Yeah, so the stock market, the futures are up 90. The Dow at 28,152, up 1/3%. That's what's going on there. S&P is up almost 10 at 3152, and the Nasdaq 100 is up 1/4%. There's talk as well that Chinese economic numbers came out quite good for manufacturing. Well, I'm looking here, the Caixin manufacturing PMI. It was forecast at 51.4. The previous was 51.7. It came out at 51.8. Yes, it's better than expectation, but is it that much better? I mean, it's just up 0.1 from the previous month. So they're mentioning this, the mainstream media, the headlines are mentioning this data as well as a reason why the stock market is higher. I don't buy it really. Currencies, they're fairly quiet. Sterling or cable and the euro and the dollar versus the yen are virtually unchanged here. I won't go through the numbers. The dollar is a bit stronger against the Chinese yuan. It's up almost 0.2% at 702.20. Crude oil, yes, it's up a little bit, but I see it here below 56 WTI, which is quite a move down compared to where we were last week, around 58. But we're up almost 1% right now. Brent is up 2/3% at 61.08. Let's end with the bond market. And the bond market is interesting this morning, actually. The 10-year yield is moving up quite a bit. The 10-year yield is up 7 basis points almost, which is quite a big move. We're at 1.84%, the 10-year yield. So that means bond prices have come off. It seems to me quite a big move, even though the stock market is up. And recently we've seen the stock market go up and bonds not move. So we need to keep an eye on this. I think we've got a Fed meeting next week. They're not expected to cut. I thought they might cut, but we'll have to see. I think it's December 10th and 11th, and they decide on the 11th. So yeah, this is interesting because bond yields start going up very quickly. I think the markets might have a problem because one of the reasons the markets have rebounded quite a bit recently is that bond yields dropped from the last time the Fed cut rates from like 198 back down to like 160 or 164. So that helped keep things going. But if yields go back up very quickly here, even to 2%, it could put pressure on the markets. I would say that means less cheap money out there. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. Please share this video far and wide. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.